Friends, in this video for I Thought Wealth, I'm going to talk to you about investing in 2021 over 2020, the difference. 2020 was a year which turned out to be very different from the way we thought it would be. Firstly, it started out on a very circumspect note. We were hoping that growth would come back. We thought that things will revive, the economy will come back. And what we saw was a terrible onslaught of COVID. Everything came to a standstill, but the markets kept working. In this phase, we saw one of the most interesting trades in our market history happen before us. We saw companies lose value very fast and regain it very fast. Some companies gained far more value than they lost. Essentially, we saw a phenomenal trade which centered around COVID itself, because pharmaceutical was a big performer. So everybody was seeing how businesses would gain from COVID-1, and a lot of money was made playing those trades. The intervention by the Reserve Bank of India in the financial sector and the Ministry of Finance in the way the NCLTs and the IBC were to function gave a very strong breather to the financials as well. So financials also performed at a time when their business fundamentals were distinctly impaired due to COVID. So it was a trade which none of us could have predicted or anticipated, but some people who had guts really did well in the trade. Now, 2021 cannot be an extension of 2020. That much is clear. And let me explain why. You cannot have a bounce every year, because you are not going to have a fall every year. The kind of fall you had in 2020 is not something that is recurring in 2021. It's done and dusted, and the bounce is also done and dusted. Now, though we are having a second wave of COVID, the response of society and markets to this is going to be superior to the way it was last year. We will see that economies will be able to handle this far better this year than we did last year. We have the support of the vaccine. We have better responses coming up from all of us. So we are going to see this wave to be far shorter than the last one, and therefore it would be very premature or very hurried to try to read trends based on this wave. Essentially, if you bought companies which made medicines and benefited in COVID-1, I don't think that's the right thing to do in COVID-2. So the response to COVID-2 should be very different from how we responded to COVID-1. I would think that a more nuanced response will think beyond this and see how businesses will recover and how their learnings from both these waves of COVID will make businesses far more resilient, stronger, and performing. So it's essentially how we outgrow this difficult phase as investors and as an economy, and that is where the theme lies. If you look around you, you will see that people are habitually playing the same old trades of last COVID, and that is essentially not a bright thing to do, because on the other side you are going to see that the guys who are very astute in COVID-2, which is the index investors, the FIIs, they are all selling. So which means that retail is going and buying these dips and buying the same stocks which benefited last year. This is not a good thing to do in my opinion, whereas we need to think beyond COVID-2 and think how the emerging scenario in inflation is going to affect businesses, and we need to actually learn to invest in an economy that is inflationary. When you see such a dramatic turn where one year you had a deflationary economy and the next year you have an inflation economy, you have to turn your investing very sharply and very fast. That I don't see many people giving importance to, and that is why I am saying this in this video. You need to change things quite drastically in your portfolio approaches, and I don't think that the deflationary approach which worked last year is going to work anytime in the near future. It's going to be a long while before that style of investing comes back. But that style of investing won't go out in one day either. It will go out slowly. And another style of investing will have to come in slowly. This transition is something which every investor should handle responsibly, diligently, and systematically. So that is where our investing has to change between last year and this year. The future can be very different from the past. It's very important that you align your investing to the future, move away from what worked in the past and move towards what will work in the future. If you like this video, do share it with your friends who are avid equity investors. Do stay the course with us on this exciting investment journey. Thank you for watching this video.